It is crazy that just months ago, Bitcoin hit $95,000. It wasn't just a price, it was pure euphoria. Everyone was fighting to buy it at $95,000 because people were convinced we were going to break through $100,000, which did happen, and that we would go much higher. Today, at $95,000, people are saying maybe I'll buy lower or it's still high. Whereas before, people thought that was low. Anyway, it's pretty crazy. I even remember back in March 2024, when I launched my club, it was at $74,000. And actually, it was a pretty wild period of euphoria. Because actually it's skyrocketed, breaking record after record with Trump's arrival. I don't know if you were around at that time, but it was a great era. But all this to say that $95,000, in my opinion, is undervalued for Bitcoin. We're actually going to talk about it with all the articles I've prepared for you right here. Because for years, we've been analyzing Bitcoin. Through its on-chain activity, through active addresses, through its hash rate, and also through supply and demand. But 2025 marked a real turning point. So yes, maybe this is one of the most disappointing bull runs of all time, but actually it shows maturity, and maybe we're on the verge of mass adoption for this asset, which is underperforming, even struggling compared to other asset classes. We're going to talk about it. Above all, Bitcoin has actually changed category, and that's the most important thing. But actually, I had prepared a report here from Binance, and what it clearly shows is that Bitcoin no longer behaves like a simple emerging tech asset, but as a full-fledged macro asset. Because despite a noticeable drop in activity on the base layer, Bitcoin has maintained an extremely high dominance. If we look here on Kojo, the Kojo app, we can see Bitcoin's dominance here in a very simple way. We're at 59.60%. That means Bitcoin dominates the market by 60%. That is out of the entire market capitalization. Well, not stock market capitalization, but crypto, which is at 3.20, I think today, 3.2 trillion, 60% of that is Bitcoin. And that means everything is driven, and we've seen it even more so. In 2024 to 2025, everything is driven by Bitcoin. And by the way, we're going to talk about the narrative to watch, at least the one that's been exploding in recent hours. But as I was saying, actually, this is exactly what happens when an asset reaches maturity because it's only 15 years old. I talk too fast sometimes. It's only 15 years old. It's young. It's not yet an asset that's institutionalized here. It's just starting to become institutionalizable. The rules, and we'll talk about this, especially with Brian Armstrong, the CEO of Coinbase, aren't established yet. It's more its valuation in the end that depends on macroeconomics. We've seen that in recent months. We also have liquidity that is global and no longer simply concentrated on the traditional market. And we also see a behavior among wallets, among short-term holders and long-term holders that is quite different. And as time goes on, in fact, as we enter 2026, this crucial, pivotal year, this phenomenon isn't going to intensify, but on the contrary, it's going to strengthen. But Bitcoin simply remains the market benchmark, no matter what people say. It's the conductor that everyone continues to follow. Speaking of sector rotation, there's a renewed appetite for risk because in this context, where Bitcoin is picking up again, the green color we like to see, we're also noticing something interesting at the sector level. That is, over the past 7 days, the privacy sector, that is, private data and privacy, has been among the best performers in the market. And that's not insignificant, far from it, because historically narratives related to privacy they often resurface during phases when sentiment is recovering, as is the case right now. Because in fact, they combine both innovation, real utility, and digital sovereignty. Remember real utility. I talked to you about it in the daily updates, saying that you should invest in tokens, in projects that have real utility, ones you could actually see yourself investing in. Otherwise, it's not worth it. But the nuance, which is important, well, I talked to you about it, especially in Sunday's video, which was about an hour long. But the important nuance is that the money is no longer flowing. This time, it's not going to the historical players like Zcash. You can see here that it only gained, in quotes, 12.96%. But in reality, capital is clearly pivoting toward new protocols that are seen as a bit more modern, a bit more modular, and much better integrated into the current DeFi ecosystem. By the way, DeFi is the narrative for 2024-2025, and for this cycle, no matter what people say. And ultimately, this rotation that we're witnessing is typical of a market that's starting to take on risk again. So now people aren't just buying the classics anymore, but are looking for newer projects, more narrative driven, with a better risk reward or risk return ratio. You can see it however you want. But it reminds us of the harsh reality. That is, when we're in a cycle, most altcoins, whether they're older or not, undergo a kind of natural selection. In other words, 98% of tokens crash, right? And there are some that survive. That is, it's the narratives with the greatest utility that survive. This kind of rotation can signal both a renewed wave of speculation, sure, but also a genuine search for innovation in a sector that, in any case, has long been stagnant. Is it the right time to invest in these projects when you see one gaining 110% in just 7 days? I don't necessarily think so. But it's interesting to look toward projects with real utility, DeFi, privacy tokens. By the way, let me know if you invest in this type of project. Monero often comes up, and it's somewhat criticized because it's actually conducive to money laundering. That is to say, it's actually untraceable. But let me know, by the way, if the privacy sector interests you. I'm thinking in particular of Oasis, Monero, Decred, Dash, which is an old project. I remember back in 2017 to 2018, during the cycle when I got involved. Dash was around back then, but there were plenty of projects like NEO. What else did we have? We had some dinosaurs that come back from time to time, and there are a lot of them. Others as well. 99% of them no longer exist at all, except for BTC and ETH, which are the two biggest. In short, following this statement, which is actually very telling, by our friend Brian Moynihan, I have trouble saying his name, who is the famous CEO of Bank of America, because actually what's happening is that while the crypto market is restructuring traditional finance, and I keep telling you more and more about it with Morgan Stanley, with JP Morgan, traditional finance is starting to get worried. Because according to Brian here, interest-bearing stablecoins could siphon off up to $6 trillion from traditional bank deposits. Yes, you heard that right, 6 trillion. So if such an amount and such liquidity leaves the banks, the impact would be immediate. That is to say, the cost of credit would rise, especially for small businesses, which rely even more heavily on traditional bank financing. But what he's acknowledging here, without really saying it outright, is that the more stablecoins become attractive through their yield, their accessibility, and their speed, the more they directly compete with the core of the banking business. So here we have a conflict of interest. At this point, it's no longer just a gimmick. Crypto is now a credible threat. Generally, when a systemic bank starts to express public concern, it means the transition is already well underway. By the way, stablecoins also represent an interesting narrative. In fact, Brian Armstrong summed it up bluntly, because here it's not a question of stability, it's a question of competition. On one side, you have American savings accounts that pay an average interest rate of 0.14%, which isn't much. And on the other hand, you have stablecoins which are fully collateralized, also backed by short-term treasury bills at least, and are able to offer 3.8% without fractional reserves. And naturally, when you have a product that is more transparent, more profitable, perceived as safer, and also delivers performance, it directly threatens the traditional banking model. In short, so Armstrong reminded Congress that regulation should not be used to protect existing players at the expense of innovation and the consumer. But here, he is advocating for clear rules, a more level playing field, and letting the market do the rest. And precisely, this bill we've been talking about for the past few days on The Daily Show, which is going to have an impact, actually goes far beyond crypto, because it calls into question a pillar of the financial system, the current financial system. You'll tell me what you think, but here it's more of a theory. It's that Interactive Broker has just reached an important milestone, and I might be led to talk about it more and more, because eligible clients can now fund their brokerage accounts directly in USD. So it's the stablecoin from Circle and Coinbase with instant deposits available 24/7. So there will no longer be any need to wait for banking hours. There will no longer be any need to make traditional wire transfers. There will also no longer be any settlement delays. And so the money will arrive, be converted into dollars, and become tradable within a matter of seconds. And in my opinion, this is just the beginning, because we have RLUSD. We also have PyUSD, which will be added later. In any case, that's what the platform is announcing here. And above all, there will be absolutely no deposit fees, except for network fees, of course, and little by little. In fact, the giants of finance understand that stablecoins are better payment rails than the traditional banking system. By the way, there are also infrastructure projects, for example, Tron, which hosts, well, at the time it was 160 million in stablecoins, which is an interesting project. I don't have it here, but I could find it for you on TradingView if I go to CoinMarketCap. Here we type Tron, which hosts quite a bit in this sector. Stablecoins here. When you look at its chart, there isn't any photo. You see Tron? It's been around for quite a few years. It was already there during my 2017 to 2018 cycle. And look at the chart now. It's pretty inspiring. Here, this is over a month, a year, and all here. We went from 0.06 to 0.30. So yes, these aren't crazy performances, but we do have longevity here. So we'll have transactions that are faster, more accessible, and already global. And it has almost inevitably been adopted by crypto, not out of ideology, but simply for economic logic. Speaking of logic, let's go back a bit to what Six said. Because recently he put another coin in the machine. Our dear Sizzle here, and for him, in fact, seeing Bitcoin at $200,000 is nothing extraordinary or speculative. So according to his own words, it's actually the most obvious thing in the world. And he's not talking about an if, but a when. And actually, he remains quite conservative, while there were quite a few investment funds talking about millions of dollars for Bitcoin. We're also talking about Michael Saylor. He, for his part, talks about $200,000. So he's still fairly conservative. And again, he's not talking about an if, but a when. And what's interesting is that his reasoning actually isn't based on the current candlesticks, but on a logic of construction. He points out three fairly fundamental elements for this, because first, he talks about Bitcoin's value proposition, which hasn't changed. That is, a limited supply, 21 million every 240,000 blocks. So a halving every 4 years, a reduction in rewards for miners. That's the first point. Second, an infrastructure that is purely decentralized. And third, unmatched security, since Bitcoin has never been hacked. Next, secondly, he talks about the maturity of the market, because the crypto ecosystem, as I mentioned to you earlier, is now much more robust than it was 5 years ago, much less criticized, more institutionalized, and better protected. Still, the regulatory framework has not yet been established, let alone set in stone, and we're no longer in the experimental phase here, but in a true alternative financial architecture. And here, I'm talking about Bitcoin. Third, he says it's the theory of cycles. And here, it's not about predicting dates, but about reminding us of a simple reality. The fact is, until proven otherwise, each cycle has reached a higher peak, higher than the previous one. And that's true. Remember 2017 to 2018, we went from $1,000, January 2017 to December 2017, $19,000. What happened next? From $19,000, we went to $64,000, then $69,000. That was the previous cycle. And now $126,000. That's true. And in the long run, in fact, it has always ended up outweighing the short term. That's a fact. And on the on-chain side as well, we can take a closer look at the on-chain aspect, because the share of the supply held by short-term holders in profit has gone from 0 to 60%. And this, we're talking about since the drop in November 2025. So what does that mean? It means that short-term holders, the short-term investors, are the most nervous. They're the ones who sell quickly, who buy at the top and sell at the bottom, when in fact it should be the other way around. And often, in fact, this actually amplifies panic phases. And when they massively go from being underwater to being in profit, it completely changes the dynamic. So historically, this kind of shift very often marks major turning points. Why? Because short-term selling pressure is disappearing, the market structure is rebalancing, and rebounds can be rebuilt or built on much healthier foundations, especially in a context of low leverage. And unless there's some bad exogenous news, the market is probably turning around much faster than many people think. And precisely speaking this time about long-term holders, so those who have held for quite a while, you can see on this chart here that Bitcoin has broken through its resistance, not because buyers got carried away, but mainly because the sellers are no longer there. here, which measures activity, so the value they destroyed, which measures the activity of all Bitcoins, remains very low, around 0.53 today. So this means two very simple things. First, long-term holders refuse to sell because they've convinced themselves they're certain. And second, the supply available on the market is extremely limited and has been for quite a few months now. And this is that famous supply and demand shock. And so the current demand is absorbing it without difficulty. What's left? And when demand increases while supply is frozen, is blocked, the pressure also becomes structural. And here we're not in an artificial euphoria, we're in a very healthy expansion phase. Basically, it's driven by real demand, by short-term holders who are in profit, and we have supply locked up by long-term holders. And that's why I'm telling you, and that's why I think that Bitcoin at $95,000 right now is not expensive. Ethereum, $3,200. It dropped to $1,400. Well, there's less momentum, we have less performance. Yes, the 2025 cycle disappointed quite a few people. And you can tell me in the comments, by the way, me included, I was disappointed by that cycle. But as we've seen, and as I was telling you, the performances are always getting lower and lower. Well, we were at 30%, 14%. No, 30 times, sorry. 14 times, 7 times over the last 3 cycles. And so now, in the end, actually, if we take the $69,000, we only did a ×2. So we're not at ×7. But what's important is to zoom out on the market and put a strategy in place. Also, to choose your altcoins wisely. That's why I'm talking to you about DeFi. That's why I'm talking to you about privacy. That's why I'm talking to you about stablecoins. These are narratives that are boring, but in the end, they're the ones that will be most adopted by institutions. Because it's the institutions that will bring liquidity, they're the ones who will bring performance. And in the long term, before retail investors come back, because 2024, 2025, no matter what people say, I was talking about this with some exchange operators, retail investors haven't been here, but they will come back. It's true, it's just a matter of time. It's more a question of whether it's a matter of time and not a question of when you tell me what you think. We meet again on Kojo, the nullified earth, Instagram, Telegram, especially since I asked you about a style. If you have a question today, don't hesitate to go and see. In any case, it was Julian. I hope you enjoyed this video.